We're looking at price action, say it's 7th of August 2026. So before we go into any analysis, we must acknowledge that today we have NFP. You can see how Thursday behaved this yesterday's price action. These are daily delineations on the 1 hour chart. So this was yesterday's price action, and most part of yesterday we did not really make any progress. So we're gonna have a difficult time today. Maybe we'll have price running up and down, high resistance liquidity run because of the kind of news that is gonna come in the New York Open today. So regardless, we're gonna have this time and we're gonna look at what price does. So we're gonna get into it now. So my interest into today, this a consolidation. So I'm not really 100% sure whether we're gonna run into this high or we're gonna continue going lower. From the higher time frames, we've been very bullish. If you look at the daily chart, we've been very bullish. And this week, we opened up on Monday, on August, with a new week opening gap, then we went higher. So this new week opening gap is very interesting. Price can just dip low and trade into this new week opening gap. That can absolutely happen. So we went higher. On Tuesday, we had a very huge candlestick, and then on Monday, we opened up, and then we had a down close. This was Wednesday, and then yesterday, you can see we did not really do much. Just opened up, very small wick, and then went lower. We did not go a lot lower, but we dug into these buys and balances and efficiency. This BC, we dug into that, reached into half level of that BC, and then we met the daily low yesterday, and then we came up after that inefficiency out of that midpoint. So we are trading right here today. We're gonna go into the lower time frames now, and then we're gonna see what we have. Let's pass by this 15-minute chart. So you can see here yesterday from Asia going to London, we had this lower pricing here. We had this run higher here, and then you can see we had this decline here. I was looking for lower prices, and I was ranting about how we're gonna deliver into this low here eventually. So we went lower, very difficult price action, but eventually we went after that low, after that Asian low. So you can see how we traded lower, and then going into the New York Open. This is the New York Index Futures Open at 9:30 a.m. You can see we swept this low here, the previous 15-minute low, dug deep into that low, and then came up of that low, and then overran all this price action here from London. So we ran into Asian high and made the new high for the day. That's very interesting price action, right? And then after we take out the high that has been for the day, and then we start trading low again. Now we go into consolidation and prepare for NFP. So today we've opened up very difficult price action, but if you look at the highs here, we formed a high here, another swing high here, another swing high here. So ideally price is trying to move lower. We have a swing low here, this low, this low, this low, this is a swing low. So this low here is lower than this one, and this low here lower than this one, and now we have another low here. So to me, the bias is bearish today. We're going to look at what we're going to have in terms of tape reading this price action, but just have the idea that we're going to be having a high resistance liquidity run because today we have NFP. So my interest is normally the swing highs and swing lows of the past 3 days, day 1, day 2, day 3. So we have yesterday's high here and yesterday's low here. So in regards to this high here and this low here, we are so close. We're close, not so close, but we are close to this high here. We've opened up today with a new day opening gap, very small one, but it's significant. We trade higher, trend these highs here, and then rejected that, run higher, and then we've been like rejecting lower. Price goes higher, rejects lower. Spend time here inside this consolidation here. Try to go lower, came back up higher, and then we've gone lower again, and now we are up here trading at 29,392. So let's get into this other chart. Actually, let me remove this. I'll remove this later. So let's just tape read this price action. Oh, this is the weekly inefficiency. Interesting, right? So there's something different about this chart today. I'm gonna be waiting for anyone who watches this video and recognizes it to kind of like tell me, but I doubt if they will. So that the daily chart is the 1 hour chart. Let's look at it from this lens. So you can see the 15-minute chart here with the new day opening gap, and then look at this 5-minute chart. It's just is not really moving anywhere specific. New day opening gap, we go higher, go after this high here, and then we reject that, right? So that CB is important, and then we trade around it. You see, trade around it a lot, and then we have this rejection here, another CB. We go into that right there, and then we reject that, right? I've talked about lower prices, and now we are here. So this is difficult. This is the one of the craziest price action I've seen after yesterday's price action. This while. So I'm gonna annotate the mid and New York opening price. We opened up right here. That's that 7. Oh, that is the 0 GMT open, and then this is the Asian open right here. So we open Asia, start trading higher, went after this high here. Rejection, I've talked about all this. Ran higher through that CP, rejection, higher again, lower, higher, high resistance, liquidity run. It's not trying to go anywhere, but we're going to be looking at what this session has. So this is the mid New York open. Right here. So right there we opened up. We've gone below this low here, and any relative equal lows from yesterday's afternoon session. We have a low here, and we also have this low here. So we have this wick here. So that's an inefficiency that is gonna be significant if we start trading lower. So after we opened up here, we've ran that low out with the wick together with this one here, and then you can see the run up higher here. So my mind is like, I'm going to be looking at this inefficiency here. And why is that important? Because we've not ran much into that inefficiency. We've traded here into it, got a rejection, and then we ran lower and made the lower low after running a little bit higher and taking out this low here. So That inefficiency is important, and now that is it's overlaying itself with the new day opening gap, so that is significant. So let's highlight this. This is gonna be, extend this to 8. It's supposed to be olive drab. So let's extend it to 9, and then I will enter that midpoint of that efficiency, and we'll be looking at if price has an interest to go high and above it and close above it. So there we go. So if we go above this inefficiency, the midpoint of this inefficiency, then I'll be expecting price to run into these typical highs here. And now that we have this wick right there and it's wide open, I will expect price to run into that and then start running into that wick. So I've said that it's difficult today. The bias, I mean, the momentum is weak. We've been running lower, but it's a high resistance liquidity run. So if we stay on the lower portion of this inefficiency here, like it's doing, I want to see it run lower and then obviously run into this week. So another thing that I want to do is, if you look at this daily chart, we have this inefficiency here. So that is also important together with the quadrants of that inefficiency. So if you do that, the midpoint right there is 2911.4. So let's delete this here and do the other way around. Well, what's that mid gap again? 111.4. So we're gonna do this here. Oh, right there. So I'm gonna put a trend line there. Oh my god. Okay. So I'm gonna go this one on chart and then I'm gonna put a trend line. Let's take this line here. And then I'm gonna put a trend line that is 9,111.4. That's the midpoint of that inefficiency. So that is that yesterday's low. So this is how I annotate my daily inefficiencies. If we have a week that is important, also this is how we annotate it. That price point. I was putting this fib here just to tell me what the upper quadrant of that inefficiency is. So 29,255.4, that's a significant level. It's around here. So we're going to annotate that 255.4. So that's the upper quadrant of that inefficiency. And now we have, I'm not going to annotate the lower quadrant, that is 28,967, because we still have this range here to be interested in running into. So those are the lower quadrant, and then that low, this candlestick's low, that low is this low here. So this Wednesday's low is important. I talked about it actually yesterday. So we're gonna put that is 319.4 right there. So that price point is very important, including today's price action. I talked about it yesterday. I talked about how I wanted to see price run through it right here, and that was the draw lower. Today, this inefficiency is significant. That from this candlestick low to this candlestick high, that is significant into today's trading. So let's get back to a 5-minute chart. So that is that price point there, and that upper quadrant is right there. So if we start trading lower fast, this is what we're gonna reach into. So we've respected this inefficiency here, the halfway level of that inefficiency, and we are trading lower. So it's also important to talk about if you look at the low of yesterday. This is very wild, right? We open up, we start trading lower. That Wednesday is low right there that I was talking about. I was looking for lower prices here, and then we had this run lower. So eventually we had this run lower. We ran to the upper half of that inefficiency, that is 255.4, that level, 255.4, that 256. And then we'll make a run into that level and make the daily low right there. Very, very significant. And then we move higher, move through this level here, and you can see the candle close here and the open, very significant. We move higher and take out that Asian high and make the daily high right there, and then we consolidate going to the close, very significant. Today we've opened up so close to that low, made this run higher, and then we went to the consolidation. Asia has been a consolidation, and now I'm talking about this inefficiency here because it overlays on that low. That's one. Another thing, it's overlaying itself on that new day opening gap. So I'm expecting price to go lower because we've been moving lower. We have lower lows and lower highs. That is significant because price is weak. So I'm expecting price to start moving lower, and the best it can do is run into this weak here and run into this low. So that is the momentum that I'm expecting, and plus the concept that I'm expecting. So if it runs this low here one more time, we have this low here. This yesterday's sessions low, New York sessions low. That is the sell side that I'll be expecting price to run into. Right there, you can see how these lows are relatively equal. We went lower here, but we did not take out this low here, but we took out this. So that one is also significant. So we are trading around 29,367. We're remaining with 5 minutes, and then we're gonna be having the 750 to 810 macro. And we'll wanna see where they wanna push price to. So on this level here, we opened up, we ran higher. So to me, this a retracement, and then it's gonna make a run lower. So we're trading around this 29,380 level. This inefficiency low, the low here is the low, the high of this candlestick here is 29,381.6. You can look at it right here on the H high. That candlestick's high, that is 381.6. So that can be a very nice selling point if we run back into that inefficiency. But the fact that we're trading on the upper half of this daily inefficiency, that in itself from the higher time frame is bullish. But the momentum is weak. So we're gonna be seeing how price trades with the narrative of this inefficiency. And so far, we formed it, ran into it. You can see the rejection here. The body stayed below it. And then we ran from this low here into that low, swept that low, and together with some lows that I've talked about. And then we had this run higher from that low. We went into this inefficiency here. You can see the bodies, they've not even traded to the halfway level of this inefficiency, and then we start trading lower. So we're trading at 373 now, and I've talked about if we run to that 8 level, we can expect price to start trading lower. So if we are very weak, price does not necessarily have to trade into this inefficiency here once again. And I want to see it just collapse out of that level and trade into that sell side. I'm just looking at it just to make sure that the open there is well noted. So the 15-minute, we have a lot of wicks here. This is the clear characteristics of a high resistance liquidity run. So NFP is coming in today. We're gonna see what where they push it into. And just because today is we're in August, all I'm trying to do is predict where they're gonna push it to. So when time comes, my time is 3:30 p.m. The New York session, that's 8:30. That's when the news comes into the marketplace. You want to be interested in seeing where they push it. So the best, I want to see where they can push it with this Nasdaq is lower prices, while the dollar index rallies higher. So everything goes lower, the dollar index goes higher. If you look at the dollar index, let's just look at the dollar index here. One of the reasons why I've started to record this here. Let's look at the weekly chart. Honestly, I've not been looking at the dollar index for the most part of this year. I've not been looking at Forex. I'm only trading these CFDs or index futures. So these are weekly inefficiencies that I had highlighted before. This is the weekly inefficiency from this low here. This suspension block, the volume imbalance from this plus this volume imbalance, and that's very small inefficiency though. So the whole of that range is significant. And you can see if this here, we opened up right here after having a very huge decline last year. So we opened up this here, and then we had this drop below these lows here, and then we've been having a run higher. We went lower into this again suspension block, then we ran higher in this buy side here, and now we're trading around this inefficiency here. You can see last week we had this decline here. So we're going to be looking at the daily chart, and I want to be leaving this inefficiency level for the weekly chart on. So the daily chart, you can see what has happened from April time period. We had this move lower going into May, and then June, that's that run higher into that buy side, and those are those weekly inefficiencies. Last month we stayed a lot inside this inefficiency here, ran outside it, and then going into the closure of July we ran into this low here. So it's really crazy to be trading forex because it's difficult, it's crazy. I had decided earlier, if I wanna, let me say it like that, if I wanna trade forex, I wanna be trading on the weekly chart. I wanna be removing my bias from the weekly chart, and then I'm gonna be sticking that bias for the week. If you look at the bias on the daily chart, you're gonna be changing your bias a lot. So go to the weekly chart, decide if you're gonna be bullish, like we've been bullish, but we were inside this consolidation, and then we had this decline lower here to meet this around on this top here, and then we're gonna proceed going higher. So with that said, I'm expecting the dollar index to go higher today with the news releases. I'm expecting the dollar index to go higher, and then everything bends its knee and trades lower. So that's it. So 15-minute chart, the macros come into place. That is the 750 candle, and we're trading lower. So this candlestick here did not make its way into 380s. The candlestick's high is to 379.4, and now we're trading at 366. So we're right there at 370s. The low of this candlestick here is 363. That's interesting, right? So again, I've said if we don't trade back into this CB here, this is deficiency related in olive drop, if we don't trade into that, then we'll be very weak. So we're back right there into that inefficiency, 381. And look at where we've closed. So we've run lower, touched the New York Open, and then we've made this huge run higher into that 380 level. Now it's like it's moving higher. So we're back into that inefficiency, that 380 level. So we're right there at 383s. Before, I've talked about how I expect price to trade inside inefficiencies. If an inefficiency is going to be utilized properly, I don't want to see price stay a lot inside that inefficiency. But if price stays a lot inside the inefficiency that I'm looking at and its characteristics, then I'm gonna be doubting if that inefficiency is gonna deliver the narrative that I wanna see it deliver. So we're trading at 385 now. So it's important also to note that this is the Asian law right there, and we've ran through it, and then we've had this run higher. The momentum is still bearish, so I'm expecting still weaker prices, but it's important to also note that. So you can see the decline from that inefficiency right there. We're remaining with 3 minutes until we close this 1 hour. 2 minutes now, and I'm interested where they close it. So price is still sticking itself, sticking the nose inside this inefficiency here. Whereas I wanted to see it reject that inefficiency and run away from it. So we're remaining with 1 minute. So there we go. You can see where we've closed. We closed right there at 383. We've not made much movement into that inefficiency. So this new day opening gap, this open here for today is at 391.4, and the close on yesterday's price action is 374. So from 374 to 394, Through 391, those are close to like 17 points. So that's also significant. Oh, there's my neighbor here who is playing a lot of music. It's Friday, we get it. Right? So we've ran back into the middle point of this inefficiency. That's also significant. That at 391 level, that's the open today. So let's see how we'll trade when we touch that high, and that is that Wednesday's low. So there we go. We pressed higher to 397. Boom, we've touched it. So we're trading at 400. The high here so far is at 400.2. So it's very significant that we've opened up right here. This new hour candlestick that is that 8 a.m. In New York, it's 1, and we've ran higher after that high. And now my interest is, how do we trade on the upper portion of that inefficiency? Do we stay above it? If we stay above it, then we'll be running into these relative equal highs here, together with this week here. Talked about that. But if it doesn't, if the body still respect these inefficiency here and we close inside that body, I can still expect price to start trading lower now that we've even traded above this high. So I started saying that we are in high resistance liquidity run, and the momentum is bearish, so I can expect this sell side. But you can see it's trading higher. We've not really made an effort to run into that sell side. So we are remaining with 1 minute with this candlestick, and you can see it's keeping up with higher prices. So with it doing this here, I'll be interested in highlighting these relative equal highs here. Okay, and that is buy side liquidity, the opposite of sell side, because they're relatively equal highs. So look at the body here. We've closed inside that inefficiency. So I still have some hope that we're going to be trading lower. So if we run into this buy side, then my interest again goes into this week. And I'm going to annotate that midpoint, and it's right there, 440.3. Okay. go. Then let's move this. Nice. So every level here is significant. That's buy side, that sell side together with that low, and then this is that Wednesday's low, and now we have that inefficiency to tell the narrative. So we open here, midnight New York, run lower, and then we have this run higher here, and now it's running higher. This is the that first macro from 750 to 810. I've talked about it. Starts here, we run lower, take out that low, and then we start pushing higher. And then what does price do? We push through that inefficiency. So the fact that it has done this here and it's sticking with the higher prices, I'm expecting it to run into that buy side. So if it doesn't, I'll be expecting it to start running into this inefficiency once again, and then we'll be looking for lower prices. So there we go, it's still pushing higher to 408. So want to be paying attention that we've not really traded a lot into this inefficiency once again. So what is it running for? The relative equal highs here, together with this wick. So I'm gonna be honest. Yesterday was a little bit uh, with the it traded with the high resistance liquidity run, but the sell side still delivered. But today it's even more difficult, and we've not delivered sell side. So that's significant. Look at the push higher here. This buy side here, this candlestick's high is 29,422.2. So 422. We're trading at 412. Look at that. See that run higher? What is it starving for? Those buy side liquidity, um, those buy stops there. You can see how we brain higher. And the fact that we have this wick here, this is a gap. So that's an external range liquidity pool. So that's very nice, right? So that buy side is out, and you can see how it's really running into that. Beautiful. So I'm gonna take this screenshot. Once it takes buy side, I'm gonna take that screenshot, the screenshots. That's what you wanna do. I mean, you've achieved what you wanted to see it achieve. Yeah. And then you can take the whole screenshots for the daily, the 1 hour, the 15 minute, and this. Yeah. So we've done two things here. We've run buy side, and now let's see whether they'll start running it into that sell side. This can be the manipulation that I talk about. And then after we bring into that buy side, we start running lower. So what's gonna tell that narrative? That inefficiency right there. So if we still wants to keep up with the higher prices, my interest is on this week right there. If we start trading higher into that week here, we start sticking up into that week, then we might want to be interested in running that high, that Asian high. So you can see the fact that we closed right there, we open up and then we run after that buy side very fast. So there are a lot of things to weigh out when you are trading these concepts. You must be able to weigh out and just be sober about it. If you're really impulsive, then you're gonna be losing most of the time, because if I could be like impulsive and sold right there at 380s because we're going lower, I could have been wrong. I've been wrong before. Like if you look at what happened on Monday and Tuesday, me coming in front of this macro here and trying to go against it. I mean, I was wrong. I was wrong. Even though later I recovered some of that wrongdoing, but the fact that I was wrong the first round. And normally I hate it when I'm wrong the first round. I don't know why these levels of mine keep shifting. So price is still sticking up with that higher pricing. We've run that buy side, it's going higher still. So the purpose of those relative equal highs, they've served their purpose. So that's also a PDRA. So my interest is on how we trade around that week, or do we get back into these inefficiency and start trade lower. So what price has done here on the 15-minute is just, it has gone against what I was expecting for momentum, and you can see where we are at now. It's difficult to set whether you are bullish or bearish on this market. It's just everywhere. It's just everywhere. And this, when this happens, I may just not do anything that I find in price. I just might skip this day. And all of this is the impact of NFP that is coming in at 3:30 my time. So I understand all this price action. I understand why it is doing this here. I mean, this is not easy trading like it was, let's say, maybe yesterday or Monday or Tuesday. Especially Tuesday was easy. Wednesday was also at least, but yesterday was difficult, and today is even more difficult. So in this kind of environment, you just maybe you need to stay away from price, because I was expecting lower price, but it didn't, and then instead runs higher, and then runs into those relatively highs there, and now we are in the middle of that range. It's not really following the bias that I was expecting. It's not really going with the momentum. So we've run against that momentum, and now we are in the middle of that Asian range. So does it want to go higher, or do we want to stick with the lower prices? I don't know. I just must wait for these inefficiencies to tell me the current narrative in price. So we're gonna wait to see how London opens, and then we'll close this up. So we're trading at 419s now, almost at 420. So I've talked how to stay with the narrative, how to stay with the bias before. You want to be reminding yourself of what you anticipated and what you're looking for, and especially what you're looking for and what is price doing. So I've outlined my narrative with these inefficiencies, and there's no retail trader that is looking at these inefficiencies the way I am. I don't really think so. I'm doubting it to the bone. There's no retail trader looking at these kind of analysis. All of them are just looking at trend lines. Maybe someone has this kind of trend line here. Especially this one can really kill it. We bounced off here, we bounced off there, we bounced off there. That's random, right? Maybe we bounced off there. Let's take a shot and wait for it to go into this low here, that channel. They call them the channels. Right there, there's another channel. Right there, we bounced off that there, we bounced off that there. Maybe we'll bounce up there and go into that channel. What does price do? No, it just goes higher. It goes against them. But we as smart money, what are we looking at? We're looking at how price is trading inside that inefficiency. We're looking at where price is headed to, relative equal highs. Where can it head to if we trade above those relative equal highs that week? It's very specific. It's very specific regardless of, hey, we bounced up there, bounced up there. You don't even know what to do when it's in here. Oh God, makes sense, right? If it doesn't, I mean, go try it. So anyway, buy side there, we've ran above it, and we're trading at 420. So what's my interest now? How do we trade on that week with the bodies? Do we stick up with the higher pricing, trade into 450, or maybe going to 470, because that high here is around 480s. The high of this candlestick is 492.7, that high. So it can do this here. It can. Not that we have NFP today. There's a lot of volatility and it can just go one way throughout this price action. And all that can be determined on how we trade on that week. If we collapse it from here, now that we've taken buy side here, we start resuming on that weakness. How do we trade when we run into this inefficiency? Do we find, does it come lower, find support, and then attacks that low? I mean that high, not that low. Do we trade lower and then trade on the proportion of that inefficiency and then start trading higher again and attack that here together with the weak here? Or do we just trade lower, stick with the weakness here, trade below this inefficiency here, and then run to this low? So that's something that I'm expecting for price to do either, and my judgment on whether we're going to be with the bias with the momentum is going to be based on that. So we're up there at 420s still. So back down at 413.9. Back to 420s. So we touched that 420 level again. 400 level was around this area here. We just went through it. We did not even retrace back into that 400 and then we ran to that high. So we're up there at 426. So my interest again that week, and especially that midpoint of that week, and how we trade with the bodies right there. So we are sticking around this area here. We've not made any significant move from this area here. So my doubt is we're going to be running into this inefficiency again and start trading lower. Now that we've ran this high here, this can just be a retracement on this weakness. But we're going to be waiting for price to do whatever I've said, and then we're going to judge. So I talked about how the fact that we are on the upper portion of this daily inefficiency, then we are bullish. I talked about that. But price can also start trading back into that inefficiency, and especially that yesterday's week, we can trade back into that inefficiency and start trading lower. Let's look at the 1 hour chart here in this chart. You can see what we did yesterday. Closed here, and now from that close, now that it's a down close, from that close here to that low, that week is also significant. And yes, in that week we have those inefficiency levels. That is Wednesday's low. They have the halfway level of that BC and the upper half. And it's not by any chance that we had a run to the midpoint of that inefficiency and then ran higher, right? That's strength. That's strength from a higher time frame. And I won't be surprised if it's doing all of this here, trading higher. And now where are we? We are above Wednesday's low. That makes that inefficiency there. So we are above it. And what is just above it? That those relative equal highs here together with that week. So that's significant. So if we run still into this week here, the relative equal highs, this and this one here, these are relative equal highs here with the weeks together with this, even this one. And now that will be seeking buy side, and we can even run into this here. So if we do not run back into this inefficiency, I'll be taking this as a balanced price range. If price does not really have an interest to get back into this inefficiency here, then this move high is significant, and we're going to be trading a lot more higher. And now what we have here, those are relative equal highs. Those are that's a buy side liquidity point. So you can see how we are sticking with the higher prices. We're at 420, 425 now. This relative equal highs here, I want to know what that level is. So this candlestick's high is 455.1. That's interesting, right? 455. So if you want to be exiting on a trade at 455, you better be in at 430s or 420s, right? For those higher prices. But I've talked about once you run into this week here and stick its nose on that week so that we can be 100% sure that we're bullish. But this form of price action here, we can have that retracement here back down and then maybe start trading higher. So you can see the 1 hour chart here. I've talked about how we made that low right there on the midpoint of that inefficiency, started running higher, and then we went into close with a huge consolidation, and now into Asia, huge consolidation, and now we have this kind of price action here today with these weeks here, very many weeks, and then now we've had this movement higher. 15-minute, same case scenario, lots of weeks, and now we're pushing higher. We pushed above these highs here, and now I'm interested if it wants to run into those highs. So if I were to be looking at this 15-minute exclusively, then my interest will have been with this long wick as a gap, and now it's devouring into that gap. So we've started another 15-minute here. That's 8:30. It's 1:30 in the New York time. So let's see whether does it have an interest to start to still devour that wick right there. That one, and so that one for the 15-minute. Or does it want to just give up the ghost and start trading lower? So it's still sticking up its nose with the bullish prices. Look at that. Well, look at that. 417 now, 418s. So the reason why I'm not really interested in a trade, I've talked about this, and it's good to remind myself that I don't have to trade this session. There's still other session coming in next week. So we are in a very high resistance liquidity run here, especially what if we look at what we did in Asia. We have no significant move here. It's just been moving up and down with very, very huge ranges. This is a very big range. Let's look at even this from this high here to this low. This is a very huge range. So that's not what I wanted to use. I wanted to use this. These are a 98 points. 98 points just move up and down. So how are you going to be correct when it does this kind of movement? I mean, we took out this low here and then we've had this run higher on that buy side. Those are a lot of points run higher from this low here from around, let's say, to 9,380 to 430s. Those are 50-point move here. How are you gonna be correct? Hey, you're gonna be sticking with momentum and gonna be selling this. I mean, can you hold on to this here? It's just nearly impossible. So let's look at what it's trying to do here. We've ran above that high here. We pierced this wick here. One, two times. Let's use again the crosshairs here. That's the low of that wick. So we pierced it thrice. One, two, and three, right there. So we pierced it one, two, and three, right there, and then we started moving lower. So that is significant. Only three times and start moving lower. I mean, that's basically what I expect of a gap. So we've run buy side. Let's see whether we'll run back into this inefficiency here and stick with the lower prices and run lower. Now that we've had this form of manipulation here. So from that 420s, you see we've run back into 410. So my mind is like, do we have only one down close candlestick and then we start moving higher, or do we just move lower and move 400? This candlestick's lower here is 402. This candlestick's high is 381. So 4 to 381 is around 20 points worth of this inefficiency. 20 points. So it's significant. Do we have a down close and then start moving higher, or do we just move lower back into that inefficiency and then start trading into these lows? So that's something that we must wait for price to do, and then we're going to judge on whatever it's going to be trying to do next. So we're right at 4.8, around 410 level. So if price avoids that inefficiency here completely, then we'll be very bullish. If it avoids it completely, if we do not have an interest to trade to it, then we'll be bullish. But if we start running again back into that wick, then that will be very bullish. So if we touch that inefficiency here and start running back into that wick, that will still be bullish. If we start avoiding that wick from where we are trading right now, instead trading into this here and spend a lot of time into this here, this inefficiency here, then we might be very weak. If it runs back into that inefficiency and then still runs slower, spends a lot of time inside this inefficiency, then we'll be weak. And the reason why we have very high resistance liquidity run today is because we have NFP. So it's saving up all that movement that is significant for the news. So read out 4, 6, 4, 5. There we go. We bring back into this inefficiency. So we've touched the high of that inefficiency. So do we want to see it still stick inside that inefficiency, or does it touch it then move away from it? So anybody who could have been buying above these relative equal highs, that the breakout traders, they are caught up inside this move here, and some of them are scared. Some of them are already out. If you buy above 420s, it's back down to 400. This low is 41. That's 19 points lower. So look at where that candlestick closes. So close to that inefficiency. Very close. And look at it now. It's devouring that inefficiency. So it's good to resume with weaker prices now. Now that we've had that run into that inefficiency. I'm expecting it to run through that inefficiency. If we stick inside this inefficiency here for a while, then we might be very weak and we might be running a lot more lower. So we are trading on that level here. That level is this Wednesday's low. So on that Wednesday's low, we have this CB here plus this BC. I talked about how I didn't want to see it trade into this inefficiency because this is acting like a balanced price range. Balanced price ranges are not supposed to be traded through, especially with the bodies. It can do the wick, but the bodies it's holding. But if we run lower here with the bodies like it has done, and we close inside this inefficiency here with the bodies, then I might be looking for lower prices still. But look at what it's doing now. This is acceptable. If we run to that inefficiency here, we've not even touched that mid gap, and then close outside that inefficiency here, then we might resume going higher. So either of these two PDRAs are gonna confirm whatever that I'm looking for. And look at that run higher. So we've ran back down into this candlestick slow that is 393. Ran into this inefficiency here, and you can see we've come out of that inefficiency and it's running higher. So I've talked about all this, all it can do, like running into that inefficiency and then starting to move higher. So this candlestick has not made it way into 420s. This high is 413. So we're now back into this inefficiency. So today is a very nice day to learn about these high resistance liquidity runs. This is a very nice lesson for it. You might have the PDRAs, you might have anything going for yourself, but if you're just wrong, if you're wrong, you're wrong. If you're wrong, you're wrong. And you're most likely to be wrong because of the high resistance liquidity run nature of price. So look at this 15-minute. You can see the scribbling here with price action in Asia. Trend lower, but the bodies were maintaining weaker prices. And then we've had this run here after we've opened up at midnight New York open. That's a 7 a.m. my time. And all we've had is this run higher. And now we've taken those relative equal highs here. And now we are stuck on the midpoint of the whole of this range. And the best thing is we have this PDRA to tell us where is price gonna be trading to. So we've gotten back into this inefficiency here. This was once, this was twice. We touched it, but look at the close. We're closing outside that inefficiency. So the way price is behaving here is significant because look at how it was doing here. It's not really closing anywhere on the midpoint of that inefficiency. It's not really trying to close anywhere on the midpoint of that inefficiency because if you look at what we did here, it did not close anywhere right there. We went lower and took out the sell side. Came back higher, we did not close here. Start to trade lower. We have a very small inefficiency here. That is the bullish order block right there. We did not even trade to the half of that bullish order block, and now that it's embedded on the midnight New York open, went lower, and then we started trading higher. We went into that inefficiency and then straight up through that inefficiency here with another inefficiency. So that makes that inefficiency very important. Then we went higher, trading into this buy side, and now we are back down inside this range. So that inefficiency here is very important. You know how price will trade and how many times does price touch it. How many times do we touch it? Like now we've touched it right there. That's twice. If you want to be bullish, I don't really want to see it touch it a lot. I want to see it stick its nose into higher prices. But if we are really weak, then I'm gonna see it delay itself inside this inefficiency here as it trades lower. Let's extend this inefficiency here. So we're trading at 404. I talked about the high of this inefficiency is this candlestick slow. This candlestick slow is 402. So 402 and 381, 381.6. So that inefficiency is 21 points. So we're back down inside that inefficiency once again. We're trading at 400 level now. So we are inside a high resistance liquidity run. I'm not going to be saying I want to buy it or I want to sell it because we've not had any significant move that is communicating to me that I want to do either. So we've touched it once again. Look at here, we've touched the high of that Wednesday's low right there, and we've had this push higher. It's a little, but it is a push higher. And then what do we have here? A swing low. So I'm interested, do we want to take out that swing low, or do we want to assume that inefficiency after all and start trading higher into this one here? So again, a high resistance liquidity run condition. So we are trading at 850. This is the macro that welcomes the London Open. So this is going to be very significant. Do they run lower and take out this low here and stick with the lower prices, or do we have an ability to start trading higher, go above this high here once again and devour into that week? What I want to see, I don't know. I don't know. That's why I'm not really trading it. I'm not really trying to say buy 400. I'm not really trying to say buy something, but it is coming. I'm not really trying to say sell anything. So we're gonna just have to wait and see. We're right there at 4645 now. You see how it's up, it's offsetting my trend lines. So we're back down into that inefficiency. We've touched it. I talked about weakness when I came into this price action. We're making lower lows, and now that we've gone above this here, this is supposed to be significant. If we are really weak, I want to see it stick with lower prices. I want to see it run into this inefficiency here and then devour lower prices. So we've touched it. This candlestick's low so far is 42.0. This low was for 42.5. So price itself, it's skeptic about moving lower, moving higher. But let's wait and see. We're remaining with 1 minute. Then we're gonna finish this first 5 minutes of this macro. Got the move higher there. It's interesting, right? We touch it one, twice, 3 times, and how it's moving away from it. So does it have an ability to run higher into these highs here and eventually into that week? Or look at where we've closed. Nowhere significant. Or does it have, or does it want to just trade lower, back into that inefficiency? So it's back down, still keeping on with those small prices. Well, I've been recording for 1 hour and 30 minutes. This I think is the longest that I've gone this week. And yeah, it's important to stay in front of price action for this long so that you can know what it does, how it does it, what levels are important. So you can talk through what you're supposed to be doing and what you're not supposed to be doing. So we're sticking with lower prices still. We're trading at 404 now. So we're remaining with 3 minutes, and then we're gonna close these 15-minute chart, this 5 minute, and the 1 hour. So London Open is in 3 minutes. Yesterday's London Open was very nice. We had a price run lower from the start of that 5 minute candlestick. We started running lower and then we ran sell side. Immediately we opened up at London. So whatever is happening here, I think that's what we're gonna also have today. We'll open London and then we start trading lower. So we have 2 minutes and then we're gonna see if that's true. That momentum that I've just talked about right now, that is in the form of these weaker prices with the bodies. The bodies make lower lows and they make lower highs. So what's the momentum? We are weak. So in around 1 minute and a few seconds time, we're gonna see how we open up London. Do we open up here and start trading higher, or do we just open up and start trading lower? From the look of things, this was just a run into buy side. Now we're gonna run lower and sticking with the weaker prices. So we're back down into that inefficiency here. So we touched it here once, twice, thrice, 4 times, and 5 times. So that's significant. So another thing that you want to be reminding yourself is I talked about how we've touched that week. That's a premium week. We touched it 3 times. That was 1, 2, and 3, and then we started being very weak. And now I talked about how many times do we want to be referring back into that inefficiency. 1, 2, 3, 4, and now we're trading in it. And now where are we? 29,396. We're trading lower. So from that 400 level, that 4.2, they have that inefficiency. We're trading lower. So there we go. We open up London right now. So I want to see it devour the whole of this inefficiency. So we're gonna see what we do inside this London Open. So there we go. We've opened London. So we're back up to 400. So I want to see, does it have an interest to run into these highs here, or does it want to devour the whole of this inefficiency here and run lower? Remember, we are inside a very high resistance liquidity run, and I'm gonna stay here until this macro closes, and maybe 5 to 10 minutes past 9:10. That's around into 9:20, and then we're gonna close this recording and call it a day. So we're gonna be waiting for NFP to see how it pans out. So honestly speaking, we've not had anything interesting today. Prices has not been interesting. We've not really had a very significant move with momentum. We've only had a run back. Let me call it the retracement. We've only had this retracement here back into these relative equal highs. That's the most important thing that price has done. And that's just because we have NFP today. So they are suppressing this move here that is supposed to be happening. They're just suppressing it so that NFP can have all the show to itself. I barely look at US 500. Let's just look at the pick at what the 5 minute for US 500 is doing. Look at this, just the same business here. Open up here, very small new week opening, new day opening gap. I mean, run higher, and then we'll get that decline. Then very just complicated price action. This is no momentum. Open up here, midnight New York, right there, and then all we've done after running this low out is just this move higher back into these highs. So nothing interesting there. And there is nothing interesting here. So I'm gonna wait for this macro that welcomes London to do its thing, and then we're gonna call it a day. So we're trading right there at 29,400. So to a new trader, this can be very boring, but to somebody who wants to know what the market is doing, and if you want to do this on your own, you must undergo this. There's no skipping the process, bro. There's no skipping the process. You must just have to look at price every day, look at what it's trying to do, and journal. And my journal is this YouTube channel. Whatever I want to see how price performed yesterday in regards to what my trading plan is, I want to go and look at those videos or download them and then look at specific parts. So price has not really had an interest to trade back into the midpoint of that inefficiency. We've only had this run into this inefficiency, and look at that uh, performance right there. It's trading higher. It's trading higher now. So the fact that we've not even touched that mid gap is significant, is important. So we've had this body here run lower, and then this huge candlestick run higher. So with that movement here, I want to see it run into these highs here once again, and then devour into that week. So you can see how London has opened. I wanted to see lower prices, and I just mentioned that I want to see it trade lower, but you can see it has just done the opposite, run higher. And now we're trading at 420. So high resistance liquidity run can be very disappointing for somebody that wants to like trade immediately. But do you know what the condition the market is going to offer you if you want to be in this market? Does it have the right momentum? Does it want to go higher? Does it have an interest in running into somewhere, running higher or running lower? And today, this is not the case. It's just been stuck within, let's call it a radius. Maybe you can understand. From where we opened, we've been within a radius of 50 points. It has not really performed. But all we've managed to have is this run higher. And now it's running again higher. So I want to see it run into these highs here and eventually devour into that wick and then run to these highs. So the way I want to see it do it can determine whether is that momentum or not. I want to see it run higher with steady bodied candles, not candles with huge wicks, just steady bodied candles. So we've touched that wick here, and you see we've gone above this highs here. That's nice. That's nice because that's buy side. So I want to see it run to the midpoint of that wick. So from 420s, very nice run to 433s, and I want to see 440s, and we'll see whether we'll have that here rain after. So that's buy side. Relative equal highs, there's a pull of buy side. So we're trading 430s now. So all this move higher is against the momentum that I said I wanted to see. But I also said that these are very high resistance liquidity run. And now that we had this price run from this low here, the midpoint of that daily inefficiency yesterday, it's allowable. It's allowed for me to allow price have these runs higher. You can see the 15-minute here, open up here, midnight New York, trend lower, and then now it's running higher. We have this retracement lower, and then we run higher immediately after trading into that inefficiency. Run higher above those highs. That's interesting. So best case scenario, I want to see it run still inside this inefficiency this week. I want to see it run higher and then eventually run to that buy side. If it does that in the shorter time possible, that would be very nice, and then we'll close this up. So we're trading at 432, still trading higher. So you can see the macro that opens London, what it has done. 850, very small candlestick. 855, we had a down close that takes out this low here and trades back into this inefficiency, and then when we open up at London 9, very huge run higher. This candlestick's open, that is 397, and the close is 415. So from 397 to 415, that is 18 points, and they disregarding the high and the low. You can see the high is 420, the low is 394. So that's a very significant move. Those are 26 points. The next candlestick here opened right there at 415 and then run higher. The close is 427. It's a very nice, significant move higher. Now that we are trading, we're looking at London. So to me, the price has an interest in running into this buy side here. And that buy side is 456.9. The exact candlestick, this candlestick's high, that is 455.6. So it's around that 450 level. So I'm gonna stay here for the next 8 minutes, and then whether it trades into that buy side or not, that will be it for me for today. If it runs into that mid gap, that will be just be satisfactory, and that is 440s. From the 440s, if we went long at 420s, was a nice 20 points run if we touch that mid gap. So we're trading at 432s now. So the time is 9:13. Let's do 13 a.m. New York. That is 14 minutes into London Open. So I'm interested to see where we close with this 15-minute candlestick here, and where we open up with the next one. We open up and start trading higher, or does it open up and overlay all this movement higher with a new 15 minutes? There we go, we've opened up 15 minutes, and still pressing higher. So my interest again goes into these candlesticks below that closing price. That's for 425.5. That level is also important. So my closing remarks this session is, we've not really made a huge move, a very significant move that I can be proud of. So we've not really missed anything, honestly. We've not missed anything, and this is just the impact of NFP that is gonna come on later in the day. So I don't want to be talking much about this price action here, because it is what it is, right? So we're gonna be patient, wait for another day that is gonna have a very nice run for momentum. And I've had such days, and I know what it feels to have such days. It's very nice, it's very easy trading. You don't really have to stay here a lot or talk too much. and that it is what it is. So this is NFP 7th of August. This is the first Friday of August, and we must bend our knees to NFP. So that's really it. High resistance liquidity run here. So from where we opened up here, we opened up at 362. Let's round that up and say 350s or 380s, and where we're trading at 427. That's I mean, it's a move, but it's very difficult to anticipate that kind of move with all this price action here, with all these wicks here, with all this move higher in a market that was moving lower. So it's difficult to anticipate this move higher. It can just happen, so without you even noticing it. So that's really it. I think I've said enough for this session today. I'm going to wait for 2 minutes and then we're going to close this up. So we've had this London macro come in here at 850. It has not really done much. Down close candle here, and then it has pushed higher into these highs here, into these relative equal highs here, and then again into these highs here. I wanted to see it reach into the midpoint of that week, but you can see it's not really interested in that. We've remained with a very, very small space to reach into that. So we've opened up this new candlestick here and it's trading lower. I've talked about how I want to see the low, the close of this here. That's the low of this week here. I wanted to expect it to act as support right there, but you can see prices just going through it. So these are the tenets of a high resistance equity run. We spend a lot of time inside inefficiencies on which we do not want to see, which is a factor that we do not want to see if we're reading inefficiencies and other things. So that's really it. This has been a very interesting session and it's productive. Another thing that ICT taught is you have to know where you will be wrong so that you can avoid those moments. And this one moment that where you can be very wrong. If you're trying to sell here with the momentum that we're weak, if you're trying to sell, you're gonna be very wrong. It's gonna go higher. So that's really it with this session. Until next week. Adios.